Hello friends, myself Shashank Singh and you are watching my YouTube channel. So today's topic which I will explain you about monetary policy. So what is monetary policy? Multiple time in examinations of RBI exam, bank exam, UPSC exam, this question is always asked in the examination. So what is monetary policy? I will explain you this topic in this video. But before I will explain you about this monetary policy, before I will explain you about inflation, that what is inflation, because somehow monetary policy and inflation both are interlinked together. Why? Because monetary policy is policy implemented by the Reserve Bank of India to control inflation. Now question is arise, what is what is inflation? So inflation is basically, in simple terms, inflation is the increase in the prices of goods and services. Now, what is inflation exactly and why the prices of goods and services increase? So I will explain you first of all about inflation. So obviously if we talking about the economy, okay, so there is a topic, there is circular flow of income. First, you have to understand this topic of circular flow of income, that how money will circulate in the economy. And in this topic, circular flow of income, I already explained in my another video, which link is mentioned in my description box. You can check it out. Now come to the topic of monetary policy. But first of all, I will explain you about the inflation. So basically, inflation is done through various methods, and it is calculated by the consumer CPI and WFPI model. But now I will explain you in a simple terms what is inflation, why the prices in increases. So in simple term, because there is a big economy, we are a capitalist economy, and in capitalist economy we are in an open economy where a country will trade with the other countries. So somehow there is the prices of dollar which is the currency of world economy, okay, medium of exchange for the trading, and also the petrol prices, gold. So these all prices are interlinked together, and which directly or indirectly impacted in inflation. Now, come to the point, what is inflation? As I told you that inflation is basically an increase in the prices of goods and services. And why prices are increasing? As in simple terms of demand and supply. When we read demand, that there is a market supply and there is a demand of a goods, the people are spending a lot of money to buy a multiple products without interfering, without justify or judging the prices of goods. So they just buy the product, okay, and when they buy the product on a large scale, so what the role of producers which selling their products, they increase their supply and they increase their prices of the product to capture the profit of all the products. That's why the inflation is occur. But inflation is consistently, or I can say that inflation if increases day by day or a time period, a sustainable way, so that is fine, it is good for the economy. But if inflation will increase drastically, immediately on a large scale, for example, there is a price of a good is 10 rupees, and next day their price will increase to 500 rupees or 1000 rupees. So this is called hyperinflation, and hyperinflation is very dangerous for our economy. It will impact directly on unemployment, there is impact on the recession, all the lot of thing, and there is maybe the possibility of economic crisis. So these things are happened in the economy, and that's why the RBI introduced the monetary policy to control this inflation, okay. Now, what is what is monetary policy? Let's discuss this topic on this board. I already mentioned the details of some key points. I will explain you one by one. So, monetary policy is implemented by the Reserve Bank of India to control the inflation. Okay, but how monetary policy can work, and what is exactly monetary policy? What are the key steps taken by the monetary policy, and how can it work, and how can control this inflation? So let's discuss this topic. First of all, monetary policy is basically a kind of policy. There are a lot of rate of interest. In simple terms, if I will say you what is monetary policy. So monetary policy is a simple kind of policy in which there is a rate of interest which is introduced by the banks. Okay, the banks, what are banks? Banks are just giving a loan to the multiple people in our economy. Okay, so they introduce the rate of interest. If just imagine if rate of interest is very low. For example, if you want to buy a car and there is a rate of interest of 15% in the market, So, shall you buy the car? Obviously not, because the rate of interest is very high. But if the bank introduce the rate of interest or decrease the rate of interest to 8%, so obviously you can buy a car. So this is all about the monetary policy. The bank will reduce or increase the rate of interest of loan amount, and the people will buy or not. And it is all about to control the economy, to control the inflation. But the question is arises, why just because of to increase and decrease the rate of interest of a loan amount and the economy will control it. Let me discuss this topic now on the board, and I will explain you each and every topic as in my earlier video, in which I told you about the circular flow of income, how the money will circulate in the economy. So let's have a look, a small diagram in which there is a bank, okay, which controls the economy. So this is all about consumer and this is all about producer, or we can say firm. So basically what will happen, obviously consumer will demand, producer will supply that product, okay. But there is a question will arise, monetary policy will work on the two terms, that is saving and investment. That is S denote for saving and I denote for investment. Now what is the use of saving and investment and what is it exactly? Let me tell you. What is saving? Saving is something like that. For example, my salary is 1 lakh rupees. Just take an hypothetical example. My salary is not 1 lakh rupees. I am just giving an example that my salary is 1 lakh rupees. Okay. Now I am spending 70,000 on my expenses like my medicines, my family expenses, my house rent, my EMI of my car, etc., etc., etc. So I will spend 70,000 per month and I am earning 1 lakh rupees. So how much I save? I save 30,000 rupees per month. So let's assume this 30,000 I am saving. So obviously there are a lot of people in the economy who receiving their income, salary, profit, whatever in their bank accounts, and whole amount of saving, just think about it, in the economy. So that saving is very important in the bank accounts, because then bank will give a loan to the multiple people in the economy. Okay, now come to the second point, that is investment. So what is investment? Investment is basically an amount taken from the bank as a loan and invest in the economy, like infrastructure, health, educations, and the another important point, that is production. Because every firm, every production firm, every business industries always take a loan for investment for their business. They will never use their profit money or the earning money invest in their economy. They will never do it. They always use the investment amount taken from the bank and invest in the economy. Just think about it. Like for example, if I want to buy a house, so obviously I will take a loan. For example, I want to buy a car or a motorcycle. I want to take a loan to the bank, and now the bank will play a very important role in the monetary policy. Okay, so this is all about saving and investment. So always remember, saving equals to investment. If saving equals to investment, that is called a healthy economy. If the saving or investment is smaller than or greater than, so this is how about the monetary policy will work out here in between saving and investment. And how can monetary policy work in between this? Let me give you an example and explain you a little bit about this. So if saving is greater than investment, for just think about it, in the total amount of saving is greater than investment. So what the RBI do? Bank have a lot of money because there are a lot of saving in the bank accounts. So what the RBI do? RBI will rate of interest. The ROI is basically a rate of interest. So if saving is greater than investment, so bank will provide a lot of loan. They decrease the rate of interest because they have a lot of savings. Okay. So what will happen if the rate of interest will get down? People will get more loan. They will spend more in the economy, obviously. So what will happen and what will be impact of this? There is increase in the investment. So investment get increases. When investment get increases and somehow saving will get smaller than investment, now there is the chances of inflation or maybe a hyperinflation. Obviously people are getting a lot of loan from the bank and they are consistently investing in the economy. So somehow there is a chances of inflation, because when people spending in the economy consistently, now the inflation will increase automatically. Okay, so there is a concept of demand and supply. So what I told you, let me just give you once again that when saving is greater than investment, so bank will decrease the rate of interest of loan amount and people will get a lot of loan, people, government and other business firms and all that. Then what will be the result? Investment will get increased. When investment get increased, so saving will get down. So when saving is smaller than investment, so bank what will do? Increase the rate of interest to control the spending in the economy. And this is all about the concept and the strategy implemented by the Reserve Bank of India as monetary policy. And this is all about the concept of monetary policy, which the bank RBI will perform in a bi-monthly or quarterly basis. This is how about the working of monetary policy by the Reserve Bank of India. Okay, so this is all about the concept of monetary policy, how it will work. So now in short, or you can just take an example in a simple languages. Just assume like a Reserve Bank of India is like of parents. Okay, so in a very common terms, you have heard about that parents will always give their children their pocket money in a very limited way. Why? Because people if get a children get a lot of pocket money, they will spending in the market or they will get a spoiled brat. So somehow parents were very so parents get a very afraid of it, so they give a pocket money in a limited way to their children. So similarly, like banks are play a major role in the economy. If people get a lot of money and they are consistently spending in the economy, so somehow their impact will get a very bad on the economy. Maybe get the problem of recession, unemployment get increased. So somehow to control in all these scenarios, because inflation is directly connected to the foreign reserve, petrol prices, gold prices, in all about that. So impact on a large scale in the whole economy. So that's why RBI play a very important role to control the flow of the money, of total control flow of the money in the economy through the process of monetary policy. And this is all about my topic about monetary policy, and I explain also about a little bit about the inflation. So this is all about my topic of inflation and monetary policy. I hope you get all my key points and understand easily what I told you and explain you about the monetary policy and inflations. So this is all about my topic. So if you like my channel, please like, comment and subscribe. So this is all about today's topic. See you in the next video. Thank you very much.